I want to give you guys an update on the NASDAQ as well as the SNP500 and the Dow Jones as well as the dollar index there as well. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please leave a thumbs up there as well. Now before we get started, I just wanted to inform you guys that I do have certain perks on the channel now that was made available by YouTube for me. You're more than happy to go and check out what perk you can get and what the contribution is to obviously help the channel. Again, it's not something that you have to join, it's just something that I was given access to, that I am sharing with you guys at the moment. Basically all you do is you come to the channel and you just click join and you can see what you get for what price, whatever the case is. So what we are going to speak about here is this list over here. Now before we get started, it's very important to keep in mind that on Monday headlines read that stock futures fall on slowing China economy concerned following 4 straight weeks of the S&P 500's gain. Now it doesn't look that way perhaps because Monday we had some very good bullish rally in the market, and we obviously expected the market to reacted negatively to that data there as well. But then the following day, another headline read that the markets or investors are basically waiting for what you call it for earnings reports that was released this week, and we obviously saw the market said, okay, we're not going anywhere until that data is released there as well. Now we actually have the data available because it was that was released today, and we are going to go and have a look at that data there as well. But we must also keep in mind that we do have the core retail sales coming through tomorrow there as well, which is going to further impact the dollar index, not just the dollar but the stock market, because core retail sales and retail sales measures the change in the value of sales at the retail level in the US, and this excludes vehicles, but it is a very important indicator to see how consumers are spending, and this would ultimately give us an indication or an insight of what we can expect from the next CPI report there as well. Now the NASDAQ 100, very interesting. If you start here on the monthly time frame, we can clearly see the market had broken below support, came back to test it as resistance, printed this massive impulse, and that correction does look like a 61.8 pullback. And if you take your Fibonacci from the high to the low, and that is exactly what the market had done. It pulled back to the 61.8. Now, you know, in the market world, the 61.8 is normally known as a golden ratio. We believe that when the market pulls back to the 61.8, the market then tends to continue higher, or then rejects that level there as well. If you drop down on the weekly time frame, what do we see now? From a weekly perspective, we can see that the market is currently trading above very strong level of support over here. It got broken, it became resistance got broken. All of that resistance is now acting as a level of support. From a technical standpoint, we should be able to see a pullback before that continuation there, but we do have some data, positive data that came out for the stock market that could perhaps not make that move possible there as well. Next up here on the daily time frame, we can see the market had broken above this very important structural level over here. The market also printed this massive impulse, and if you take your Fibonacci from the low to the high, you can clearly see that we do have a 0.382 pullback that is currently lining up perfectly with this level over here. So the market is probably going to pull back slightly to the downside, and then from there we could see the NASDAQ continue higher there once again, my good friends. Let's do that. Then next up here is the S&P 500. We got similar price action, massive impulse, and we got that correction over there, and we can see we do have a 61.8. so here's probably a deeper retracement expected on the S&P 500 here as well, but again, like I said, we do have fundamental data that could potentially see this market a pullback shorter than this entire move over here. Taking the Fibonacci there from the high to the low, could potentially see a 0.382 pullback, but based off the technical analysis, we expect the market to pull back to this level there as well. Now again, we've got the same price action here on the Dow Jones. if you take your Fibonacci from the low to the high of this massive impulse, we can see that we do have a 50% pullback that is lining up perfectly with this structural level in the market over here that we can expect the market to pull back from. And that is the technical analysis for us for the stock market there, my good friends. And then we can continue that we can potentially see the Dow Jones continue, dependent if the Feds come and hike interest rates lower than anticipated. Also, if and only if CPI, the consumers CPI, continue to decline. That is basically what we want to see there as well. Next up, we do have DXY. DXY starting on the monthly time frame. Because we know that DXY is currently testing a strong level of resistance over there, and we expect that pullback in the market before that continuation there to the upside, that further upside. Here on the weekly time frame, we obviously had the market broke above the strong level of resistance, came back to test it as support, but the market is also currently testing weekly resistance. I can see how the market had been trending sideways for the lateral part of the last month, so we can expect a further move to the downside and then potentially see a continuation. But if the data continues to be negative, we can expect the dollar index to continue lower and go and test that previous level of resistance that is now acting as support, as we can see over here from a monthly perspective. Next up here on the daily time frame, what do we see now from a daily perspective? It's clear the market is currently testing this strong level of resistance over there that we've identified from a weekly perspective, but it's a lot clearer now on the daily time frame. We can see this level acted as support, market broke below that, we had a liquidity grab, a sideways movement, market over here, market broke below that, came to test it as resistance, and the market is back to test it as resistance once again, giving us a further indication that we can expect a pullback. If the retail sales are positive, we could potentially see the dollar trading slightly higher. We have this massive impulse. After an impulse, you expect a correction. We also have this previous level of support that the market broke below, came to test it, broke right above it. All of that resistance was then acting as a level of support. To have this massive impulse, after an impulse, you expect a correction. And if you take your Fibonacci from the high to the low of the massive impulse, you can see that we do have a 61.8 pullback. We could potentially see the market go and hit first before continuing higher. In doing so, the market would then also print this inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Now that's it for the dollar index. Now I want to go over some fundamental data that we have over here. Now, if you remember that I did speak about investors waiting for these earnings report to come out, and you can see here that the stocks are making the biggest move. Pre-market, Home Depot, Walmart, Massimo, and more were reporting their earnings. Now, if you go back to Monday, when the headlines had read that investors are now waiting for these companies to report their earnings, you can surface see Home Depot, so they reported a quarterly profit of $5 over there. Walmart rallied 3.4%, a 2.3% gain there. Philips up 2.6%, BHP 3%. They came through, the LA Financial came through 5.5%. Said leaped 13.5%, as well as the 3.3%. And we only had the ZipRecruiter fell 6.2%. So that basically gives us further indication that there is also a high possibility that we can also see the NASDAQ could potentially just take off from where it is now when the stock market opens. But as always, as traders, we have to be reactive and not predictive, and we need to learn to adapt to the ever-changing market environment. The same for the Dow Jones, because the Dow Jones, as we know, is dependent on company earnings there as well. That's the S&P500, but this is the Dow Jones, so it's important to keep that in mind as well. If you do get this video before the NY opens, just know that. Alternatively, if an update is required, I will make one for you guys. That is all from my side, guys. Thank you for your time, and as always, cheers for ears.